The agenda for today's talk, I'll talk about evolution of fintech, tracing the journey. I'll talk about a little bit about the history of banking within India, and we will also trace the fintech part and try to see how that evolved. We'll talk about fintech's role in financial inclusion and empowerment, because what is growth for if not people, if not to help ordinary people thrive, right? So we need to consider inclusion and empowerment. Neobanks is actually a new concept, as the name suggests, and it's disrupting the way traditional banking is done. And we have, and you know, I have a quote for that: disruptive innovation is not a tactic, it's a mindset, right? So that's something that you had to keep in mind. I'll talk about regulation and compliance, especially how to navigate within the Indian landscape. And then we have digital payments revolution from cash to cashless society. That's kind of the vision with the Digital India campaign and our Niti Aayog. Everything is being done towards going from a cash to a cashless society, because money costs a lot, right? So in digital banking, we are ahead of other countries, definitely. Completely agree. Completely agree. Okay, so let's start with the financial sector in India. Okay, it's not just about banks. We have retail banks, investment banks, insurance providers, exchanges and clearing houses doing our stock trading and so on. Government institutions like RBI, SEBI. Then we have payment processors and other service providers, like Visa, MasterCard, and everyone. So in general, if you look at the financial sector refers to the businesses and institutions that manage money and provide intermediary services to transfer and allocate. Financial capital is essentially money in an economy. So how money moves within an economy and how it is enabled by these institutions, right? If you look at the history, I mean, banks have been known to exist even during when we had kingdoms. Okay, there used to be not like very long ago, but there used to be where the king says to some minister of his, okay, this person, there is a request from people to do something, so give them money, lend them money, right, and see how the work is going on. So those things used to happen, but nothing recorded fully. Our first recorded bank that operates in the current way banks work was in 1770, when the British started Bank of Hindustan, right? Eventually, Bank of Hindustan converted into SBI, and so SBI seems to have the longest life history. They started General Bank of India as well. It's not a success. 91, it got closed, and a few other banks. But 1934, we had the Reserve Bank of India Act that was passed. And in 1935, the Reserve Bank of India was formed, right? But this is pre-independence. Post-independence, we can separate our banking history into three phases. One is nationalization of banks. In 91, we had liberalization. So economic liberalization, everything was open. So that's post-nationalization. And in 2015, we started our Digital India campaign. Although we had a fintech company that got built, and we started using it for some. That's right. So that's Paytm. Very good. Okay, so traditional banks, we have physical presence, all of the answers that you guys said. Physical presence, it provides a set range of services that it can provide. It can't just scale up very easily. Personal interaction is something that people look for in traditional banks. That's actually an advantage. With digital banks, sometimes you don't know whether uh, things are happening or not. If the internet connection is not going well, you're kind of always uh, anxious, to find out if the payment is going to go through, if it doesn't go through, or did you pay double, two times. All these kind of things are a pain point in the online world as well. But let's say talk about regulatory oversight. Traditional banks are highly regulated, so your money is kind of safe. It's not uh, always, there are some issues that happen, like what happened last year, especially with some of the banks not able to pay back their customers for all the deposits that the customers put in, because the bank suddenly paid a lot of loans to people and they didn't have any money in reserve, right? So that those kind of problems occasionally occur, but with the highly regulated uh, banking sector, it should not have happened. That's kind of uh, the key thing. Security, well, you can claim there is security, but in general, not exactly. You know, Physical banks, they can be looted, they can have other problems. Traditional banking hours, you have access to only few hours. Um, yeah, that's a good one. The share value of the banks dropping and suddenly, things happen. Physical documentation, you need everything written on paper. You have to sign and provide. Only then things get accepted. Limited accessibility, higher fees, right? For all the services that they provide, you have to pay a lot of money. Even to close your loan, though you are paying everything, they still get a percentage of as fees to take, right? And then limited innovation. They can do only so much because of regulation. So when it comes to pain points, there are many. Again, some of them keep repeating. And we have, the main problem with a lot in India, especially in the regional areas, is lack of financial literacy, and also the communication challenges. There are language barriers on how you're communicating, what you're communicating. All these um, banks, they provide information not in local languages. They have either in English or in Hindi, occasionally in local languages, but not everything. So it's not explained to people very well. And we have a very inflexible loan approval process, right? They have to follow certain things. As long as they follow it, that's good. But it's all subjective in nature. It doesn't have a clear algorithm that says, okay, these are the rules. If everything is satisfied, we approve your loan. So the one important thing is limited accessibility for remote areas, right? Banks are not accessible to a lot of people in the rural areas, and that is a big problem. I mean, to address this, we have many uh, new innovations that were done in the past, having some kind of a postal bank in the post offices, or trying to have panchayat cooperative banks. All those kind of things were created, but they weren't working as effectively as traditional banks, because people put in money, They exactly don't know what are all the other financial instruments, how to save money or how to increase their money putting in deposit accounts and trying to gain interest rates. All those things people did not have very much knowledge about, and neither the cooperative banks really did marketing and trying to attract customers. None of it happened. If it existed, some people got their job, they got specific targets done, whether they achieved or not, they still had their job. All these things just kept going, right? And it all led to um, corruption and several other aspects. So these are big pain points in traditional banks. And to address all of this is not easy, but we do have um, we do have capabilities through technology that you can improve accessibility, right? And that's kind of where fintech comes into the picture. So just to tell, there is a difference between digitization and digitalization. So every bank over, let's say, since 1967 or so, I think people have been trying to use technology to improve how financial services are being provided through banks. And we know, I mean, like in India, ATM started coming probably late 1990s or early 2000s. And since then, the use of technology-driven services to customers to make it more easier for people on how they access banks is something that we do as digitization, right? So that's about digitization is about financial industry using technology and offering technology-driven services, right? But digitalization, on the other hand, is a little different. It's trying to create an ecosystem, a banking system that's completely built on technology, right? So that's where all the banks now become, oh, I'm part of the technology industry, not the banking industry, and I'm offering financial solutions and services, right? So that's kind of the shift that's happening. And like Ranjit Sarai says, people need banking, not banks, right? That's the problem that we have to solve for, not necessarily solve for the problems with the banks, right? So fintech has a wide range of applications: digital payments, online banking, peer-to-peer lending, having robo-advisors, blockchain technology, and several different things. But why do we do this? We want to enhance efficiency, accessibility, and convenience. So essentially give a better customer experience for all banking customers. Yeah? Okay, so let's talk about fintech evolution, right? In fact, the banking industry started using technology back in 1865 when the first transatlantic cables were set up, okay? That enabled through telegraph, two banks can talk that yes, we have the information that the money is made available in the other bank, and the bank here can now process transactions for the customer, right? So that's kind of a cool thing that happened. That's fintech 1.0, and now we are at 4.0. Yeah, many things happened in between, but the key improvements started happening at the global financial crisis. And that's where we have the PayPal starting, the Paytm starting, and we have significant growth in many, many things that people are offering through technology these days. And if you look at the fintech sector, like the financial sector, the fintech sector, what it's offering is lending services, blockchain, regulatory technology, personal finance, payments, insurance, capital markets, wealth management, money transfer, uh, and mortgage real estate. So everything is now part of the fintech industry. So if you were to go find a job these days, you will be looking at the areas in these type of companies. Yeah. So again, mortgage is, though it's real estate, but they are trying to provide services like mortgage lending, digitization, providing financing platforms to make it easy for people. They don't have to go elsewhere to find. I'm selling properties, and I can even lend you money. Very similar to, let's say, in the aerospace industry, if governments wants to buy aeroplanes to build airports and stuff, right? To enable transportation and international transportation and everything, governments actually get money lended by some of these companies that make airplanes. Yeah, or government also lends money the other way around to build airplanes and so on. So it's kind of that uh, equation that starts to play, especially people have money these days and they want to utilize that money to lend people and get something in return. Very similar to how the banks do. But why go to the bank when you are being paid, let's say, 8% interest, but when the bank lends money to everybody else, you have to pay, like if you borrow from the bank, you have to pay, let's say, 10% or 11%. So essentially, why the difference? I can pay someone and I can earn that interest. That's even more than 8% that I get in putting deposits and stuff, right? So that's something that uh, everyone wants to do. And that's where all these aspects come into play. And blockchain and crypto, we know that at least cryptocurrency in the uh, regular way that has come doesn't did not see actual value connected to meaningful things that you can do. It's not regulated, agree. Uh, but things are changing now. They are trying to convert that crypto into how we can bring it meaningful. There is a lot of research going on in that one, not just to use for crypto trading by just creating memes or other things, but people are now trying to build real stuff um, like supply chain interactions between companies, right? If that is completely tracked, then you know how the uh, how the money movement is happening, how many products and inventories are moving, all those things you will be able to track. And based on that, that'll help you try to see how well that company is doing or how well the market is doing. And that will adjust what the share prices of these crypto trades are going to look like. But that is something that still people are working on. Some of and that's as it is evolving, many countries are trying to shut down the basic crypto things that are going with the miming thing and all those kind of things is getting shut down, right? People are now restricting to invest in that. More and more work is going on, and there will be a good amount of cashless payments through crypto coming in the near future. Good. So I want to next jump into financial inclusion, especially in India, and I mean it's applicable to all the countries, but in India, with the amount of population and people in the rural regions, with the amount of literacy rates and so on, financial inclusion is a big problem in the traditional banking system, as we discussed, right? So we need all people within India getting access to their banking facilities so that we know that money can be moved amongst people in an easier manner. And as long as you track money movement, your market behaviors will also change, right? And that enables growth. And growth is something that we all want, because that's how countries thrive. Yeah. So financial inclusion involves delivering financial services at affordable cost to all of society. That's kind of the basic definition of inclusivity. And I want to add this quote: technology is best when it brings people together, right? Otherwise, what's the point? Or I mean, even if it's not just technology, anything, if it doesn't bring people together, what's the point of living in a societal setup, right? So it's important to get accessibility to everyone. Like I was listening to a talk earlier in the day, and this guy was telling previously, we all had access to money, yeah, but not at the level where we can know how much we are getting. Is it the right thing? How much everybody else is getting? Can you compare? All these things was not happening. And people were getting whatever they were getting. People were reasonably content, maybe, but they did not evolve. They did not grow in a real sense. But over time, we have more accessibility to all these tools and resources, and we are able to compare and make sure that no one is getting cheated as much, right? You are getting paid what you're getting paid based on the market situation. Everybody within that same realm is getting paid in a similar way, right? So those things, those type of tools and accessibilities are available today, and that's important in inclusion. And you will see that the red boxes in here: gender equality, industry innovation and growth, um, economic and lifestyle growth, reducing inequalities, partnership, better infrastructure. These are direct impacts of financial inclusion within the country. But having said these, giving more accessibility to all these financial capabilities to everybody in the country makes it easy to reduce poverty, which of course improves health and well-being. We will have more strong institutions, especially, with less and less corruption that can happen because you have good traceability. More strong institutions will happen. Quality education, of course, taxes will be collected more easily. We can, it also gives good access to affordable and clean energy, allows for peace and justice in the system. So several indirect benefits, but the direct impacts are the key enablers, I should say. Yeah. In India, there's no social security number as to identify all about their financial stability and credit risk. Well, that is something that is getting changed based on the Digital India campaign. And just before the Digital India campaign, I think the Aadhaar number that started being circulated, I think that was that started as a way to provide a social security number to everyone in India. Yeah. And I think that's a great move. They're still trying to connect everything with Aadhaar. They are trying to link it with Aadhaar. But I think it's a work in progress, right? It's a big country. Quite a lot of people are resisting, very similar to having COVID vaccination. Quite a lot of people said, "Oh, I'm not going to take vaccination," but it did help to a large extent in tackling the problems. But we all had again, losses within our family based on that. But you still need to go for vaccination, right? So in this case, again, Aadhaar is something not, it's widely adopted. A lot of people are trying to take on, especially given that you want to prove that you have an identity, that you are an Indian within India. That's something that uh, gave a little scare to quite a lot of people. But I think at the end, things have settled down. People are using Aadhaar for good purpose, and they are getting some great benefits, especially in the rural areas, right? So I think financial inclusion in that sense, trying to have this type of capabilities built within India has really helped. And the Digital India campaign and the government being very open to foster innovation, right, is something that's great. Because many governments, even when ChatGPT and OpenAI, everything came up, several governments in Europe just shut them down, right? They felt, oh, this is not right. It could make people lose jobs and all those kind of things. But the Indian government said, no, we are going to adopt it because that's going to create more and more opportunities. And that's the truth. With more technology, more opportunities are being created. It's all about trying to get people trained and they adopting to these new things. I think that's a great thing. All right, so that's about financial inclusion and the importance of it. There is a lot of impact that it does to society, and we should all work towards how we create that inclusion within our community. Now, how are they disrupting traditional banking, especially the neobanks, right? Neobanks is a type that's associated closer to fintech, right? Because they are 100% digital only bank. And they have a structure like this: transaction, the neobanking layer that can have several of these capabilities like payment gateways, emerging technology access, uh, like AI and other things, having a general, broker solution, finance, forex broker solution, multiple banking partners. So it's like trying to build a platform where banks can be part of the platform, and everybody is getting not just the benefit of being with one bank, but they are getting benefits of several banks within the platform, being a member within that platform, right? So that's kind of the advantage. So you can have some of these services are even being provided by traditional banks these days, like um, HDFC and such banks. They have very interesting services. They allow for multiple accounts. They have API access to specific things within the bank. Not customers like us, we don't necessarily look for that, but they do provide to provide better services for the customers. These banks provide this data, or traditional banks provide this data to these platforms through APIs, and they can do personalization. If you are trying to go buy something, if you get an offer for that, paying through this bank card, I think that's a big advantage. So several advantages are there, and I think all the whole industry sector is trying to get on board with this, especially the COVID situation definitely pushed this, accelerated this forward very quickly, right? Because everybody wanted easy access to their banking because they could not go physically. They needed to follow that 1.5 meter separation and everything. So it's from that perspective, neobanking is like a phenomenon. It's in itself like fintech, and I want to show that there is a slight difference between fintech, traditional banks, and neobanks, right? So if you look at traditional banks, they are long established. Neobanks, relatively new entrants, started 2019, 2018, 2019 timeframes. Fintech companies, they often operate like startups. They work like technology companies. They're providing financial services. They are not necessarily a banking by itself, right? And these are different aspects based on which you can look at the traditional banks versus neobanks and fintech companies. You will see neobanks have very few or low fees because they are all digital. The cost of doing business is very low. And it provides flexible and convenient access. They're 24/7 available. They can tailor services to many, many types of people, right? If you are a small business, you have a very specific set of requirements, and I can provide services only for that sector. Similarly, for, let's say, student loans, and those kind of things. In a traditional banking setup, they have very fixed criteria and they cannot personalize or try to be flexible in making their loan things easier for people. But neobanks are doing that, and that's why they are kind of disrupting. But the big thing again about inclusion is about the unbanked and the underbanked. People who do not have access to banks, they are benefiting the most these days with using smartphones and trying to bank. Sorry, there is a question about when we target unbanked, we don't get much revenues too. So what's the motive to establish this neobanks? Very good question, Shweta. Uh, I mean, this is a problem that's being solved. I mean, it's in the process of solving, right? It's not solved yet, because with neobanks and even for fintech companies, how do you make money? You're providing a service, you have to get some commission for using each service, and half the thing is taken away by cloud companies because they are allowing you to host it on the cloud platforms, and for every processing, every click that you do, cloud companies cost money, right? So apart from all those, trying to make good revenue for neobanks is still a work in progress, but there is sorry, I'll answer it, Nitesh, shortly. So it's going to be like I said, it's a work in progress. We don't have a well-defined answer yet for how these neobanks are going to make money in the future, right? But at the moment, they are all in a good sandbox environment, being experimental, but it is solving bigger problems for the community, right? That's a given. How to make money is something that we have to see. Yeah. So the abbreviations in the chart, MEA is Middle East and Africa. I think South Asia, South and South Asia something, Latin America and the Caribbean, European, Asia Pacific, something like that. So the idea here is digital financial inclusion index versus traditional financial inclusion index. So using traditional banking versus digital finance inclusion, especially in the areas where it has the biggest problem, with people not getting access because they have low literacy rates and so on. I think they have the biggest benefits. The other areas, even in UK and other areas, this is kind of increasing to make a big impact, but still not fully there yet. Now, and this is where the problem of how much revenue, what is the business case of doing these things, right? So that is something still being built, but it has a lot of value in doing in regions like India, in Africa, and so on. So that is something really important to look at from a financial inclusion perspective. And this chart shows pathway to financial inclusion. You see at the moment, having secure transactional accounts, having electronic payments, basic money management capabilities, these are things that are being allowed. Borrowing, investment, long-term savings, insurance, everything needs a lot of regulatory compliance that needs to happen. So that accessibility is still not there yet. Okay, so it's again, it's a work in progress, but in general, like I said, this is here to stay. Fintech is here to stay, and it is going to solve a big problem of financial inclusion. And especially given tomorrow is our Independence Day, our concept of talking freedom is something that we want to give everyone. Right? So that's, in that sense, providing financial freedom means you need to have financial inclusion to give to everyone. From a regulation perspective, right? We have a neobank like this. We have banking, cards, payments, KYC. KYC is kind of the biggest challenge with neobanks and fintech companies, because consumer protection is an important regulatory requirement of anything that deals with financial transactions. Even if you're going to a retail market and you are buying something, you are protected through consumer laws, right? So having to know your customer, especially in having your money being parked somewhere and you're believing that it'll be safe and those kind of things, trying to have KYC verified for customers and having that quality of data on who you are giving that money to. And it's not like everybody lends you money very easily, right? They have to have something in return to make sure that you have the capacity to pay back. So, so trying to have KYC is a key requirement, regulatory requirement that where a lot of research is going on to make sure these digital banks and fintech companies are able to do that more effectively. In the traditional banks, that you're submitting quite a lot of paper trails. You're leaving a lot of paper trails, giving every information about yourself, right? It's like the number of papers that you give. Somebody can actually, if those get leaked, somebody can go make a passport with your name and have your identity stolen, right? But in general, those are security issues with traditional banks. But that to some extent can be solved, but not all of it is yet figured out. Okay, so it's a work in progress. And when it comes to the challenges, this is the key thing, like what Shweta was telling, limited revenue potential from neobanks, right? We don't know how to charge, how to make money. So that is something that we have to look at. Potential, again, how do you collaborate with core banks like traditional banks? Make sure that the money that gets deposited, and then you're collaborating with these banks, with the traditional banks, they have highly regulated access that is there. Neobanks not fully regulated, and there can be a gap. People can actually run scams by identifying these gaps, right? So how to do that? High cost of capital and no entry barrier, right? Especially to create a digital bank, there is no entry barrier per se. But to really make money, you need a good amount of capital. People invest in your bank and you raise to a certain level. Only then there is enough uh, opportunity for the government to actually take a look and make sure that they can spend more time in regulating the level of customer service, right? So there's quite a lot of these challenges listed here, and consumer protection is a key thing. And this is where the Indian government has deployed Niti Aayog, and they have an experimental way of trying to encourage these companies to showcase how they are solving the pain points of the traditional banking system, and and improving the experiences for our people and giving more financial freedom, right? So if you see, there is a restricted digital bank business bank license. So it's like we just allow you to come and uh, be part of the Indian ecosystem. You can actually sell your services, but we are watching you, right? We are watching you. Make sure that you don't screw up. Then comes the regulatory sandbox. In step 2, interested applicants must have raised a capital of at least 20 crore rupees. How many customers, right? So that'll be at least in millions of customers onboarded to the platform, and you're able to raise this much capital and make sure that the transactions are happening more in a streamlined fashion. If you're doing this more and more and in a neat way, that you are able to share your books with the regulatory authorities, your audits go really good, everything works well, and people have more trust, and you have raised more than 200 crore rupees, then they give you a full stack digital business bank license, for these neo-banking scenarios. So at this stage, is it a proposal or already approved? Well, like I said, it's an experimental platform. So the sandbox is active. A lot of these fintech companies and the neobanks that you were mentioning are operating within this environment. They have declared themselves to the government. Some are really small, they are really startups. Some are established for nearly 3 to 4 years and have raised capital more than 20 crores or 200 crores. So, like I said, as an experimental platform, this is being followed at the moment, right? There is, I don't know if anybody got a full stack digital business bank license already, but that is something that the government promises, that if you are able to do and show that it works consistently and solves the problem of accessibility to people and provides more and more services, convenience, and everything, then we are ready to find ways to license and set defined regulatory constraints. So those things, I think, is still a work in progress, the third part, but we are very active in the second part, right? A lot of companies are in the sandbox environment as we speak. Okay, so final thing is we have all these companies trying to do many things using technology. And access to smartphones is something that that's available for the most people. Not everybody has access to smartphones. So trying to get these services also means you have given them access, you are giving them education, right? On not trying to teach them how to bank, but tell them the money that they have, that they can see how much they have. They can put the money uh, in the digital bank, and they can keep track everything digitally. At least that can be done within the phones that are available. So even before the smartphones came, we used to have all these notifications of how much balance you have and things like that on your phone through SMS and so on, right? So those kind of accessibilities are still being provided as part of these digital banks. So can we go cashless as a society, right? Cashless economy refers to 100% digital transactions, and that's something that we all want to. I mean, that's the vision that the government has, and also a lot of people who are uh, aficionados of technology, they want to attract that, right? Uh, and the reason, money often costs too much, right? Trying to print money, trying to do things and maintain that money flow within the ecosystem is costing us a lot of money, right? How do we try to manage that? Is going cashless the solution? I'm not sure, but it definitely has a lot of potential, right? Um, the mode of cashless payments can be in credit, debit, gift card. I mean, that has been there for longer than what we talked about the fintech companies coming into play. Digital checks and drafts, I think it's just starting to appear. Online transfers is something that has been happening for quite a while. Mobile wallets, e-wallets are the norm of the day these days. You don't pay to local businesses through cash. You know, they do say that 95% of transactions still happen through cash in the economy. That's true, right? But in most cases, on what we are doing as consumers, you have to see how much cash are we using, right? With demonetization and with other things, with the ATMs having restrictions on how much you can withdraw, all those kind of things, it's easier for consumers like us to definitely use the smartphones and use the mobile wallets and e-wallets to pay, right? For our day-to-day life. But like, all the technology people or the working class community trying to pay taxes is only a small percentage of the whole population. And that's where that cash transaction is not a verified fact, but we don't know what other way they are going to do. So it's an assumption that they are all paying through cash, right? Yeah, NEFT, RTGS, internet online banking is something definitely comes under online transfers. Aadhaar enabled payments, that is something slowly starting. Like, we have Aadhaar links to everything, so we can enable through Aadhaar. That is again starting. UPI apps is something that's closer to having mobile wallets and e-wallets, right? But it's directly connecting to your bank account. And now, once you're connected, you're not sharing your bank account to anyone else. You're not sharing your credit card details to anyone else. You are paying to a phone number or an email ID or something like that. That's happening, and that's it. Yeah. So it definitely improves its transparency and security. So financial inclusion, reduced costs, high revenue, convenience, definitely reduced red tape. right? Tracking all the spending that's happening, and reduction in illegal and fraudulent transactions, because you're able to track how the money moves, right? So that's a big benefit. However, when you look at challenges with the cashless economy, language barrier, right? We are not having everything resolved, even in smartphones. Of course, we have a lot of languages available, but still that kind of on how you are passing information is still a barrier. Low digital literacy, of course, access to smartphones, those kind of things are still there. 95% transactions in cash, like what was mentioned. Lack of data security laws, security risks, because like we are all going towards quantum computing. People who have access to quantum computing are able to break all the cyber protocols very easily. And we have security issues that are going to be on the rise in the next 20 to 30 years, right? So it's going to be a big problem, but there are ways to tackle them. Yeah. High cost of infrastructure. So you have to have all these swipe machines and technology, sensors, everything deployed, and this is going to be a big cost. Of course, servers, definitely, everything is going to be hosted on the cloud, and you're going to have all these transactions processed in real time. The amount of processing that's going to happen itself is going to be a big cost. Yeah, good example. NFC payments. That's a cashless type, but again, it's a little far away, not happening very quickly. At least not in the real scheme of things. Of course, they are being used to do other things. Yeah. So just to conclude, fintech is here to stay, and it's very important for India's growth, right? We have to think as Indians, if the country grows, we grow. That's kind of how we should think. Financial inclusion is key for India's future, but keeping it robust and secure is critical. So even these platforms, how they are secure, because cybersecurity is becoming a bigger and bigger problem. There is not enough research investments that's happening in cybersecurity. There are a few companies, they have, again, still old protocols being used. When are they going to shift to new protocols, bring that improvement? Those things are still a challenge. So having a robust and secure system is going to be critical. And to foster innovation, the government is taking very good action. And I should say that Niti Aayog setup is a very good aspect in trying to foster innovation. So they are not shutting down these companies. They are saying, do more, but do it in a controlled environment, so that we know that the common man is not getting impacted, right? So that's kind of the experimental approach. Is India ready for becoming a cashless economy? Well, this thing is, it's going to be a while before we get there, right? Old habits die hard, and that's going to be the way. Even for people who don't see money in hand, are going to suddenly fear, oh, this is not right. Yeah, because you want to feel the money. That's kind of how the human brain works. They want a physical touch. They want things like that. So it's important that we want to be cognizant of what the human need is, compared to just using technology for just doing because we can, right? You should not do such things. Put a stop where it's needed. Don't go too far, right? Even with the AI, don't go too far. Just because you can make a machine do things, don't allow the machine to do things, right? So in post-independence India, it's all about freedom and providing financial freedom to all, especially the sorry, especially those in the remote rural regions, is critical to achieving growth and achieving India's dreams. So I want to wish you all a advanced happy Independence Day. And this is what we are all working for and working towards, getting that financial freedom, not just for us, but for all our people. Okay, so I'm open to questions now. Let's see from the Q&A. Oh, that's good. What are the job opportunities, careers in fintech, right? So I want to add, an investment in knowledge pays the best interest. This was quoted by Benjamin Franklin. So make sure that you learn all these technologies so that you can thrive in a growing India. Okay? So what are the various skills that you need? From a technical skills perspective, you need to understand, you can become a blockchain developer. You can learn AI and machine learning, try to use those algorithms to solve problems. Essentially, when you take AI and machine learning, the key thing is about trying to write algorithms that can make automated decisions, right? So you have to know what decisions have to be made, and then you use data and an algorithm to make those decisions for you instead of you having to do that manually and creating dependency, subjective dependency on people, right? So that's something that you can learn. Programming, of course, right? We have, like, since the financial liberalization, it's been great that everybody in India, the lifestyle has improved from, down to up, all because of the software industry. So programming is something that is an important skill that everybody should adopt, at least because it's all about trying to put, thinking logically and writing those in a stepwise manner. That's all, right? Once you know how to do that, that's it. You can actually ask ChatGPT to write the code for you. You don't have to know coding, but you have to know how to write those things. Yeah, sure. Just I'll finish it up shortly. And we have data science, we have compliance, especially in the regulatory environment. There's a lot of policy making that happens. So people in the legal business, having some compliance and risk skills, I think those are going to be important to thrive. App development, of course, right? Because everything is digital. You want to provide everything on a mobile. So if you know app development, you're going to make a lot of money. Non-technical skills. As much as you have technical skills, non-technical skills is what makes you thrive in the industry. Okay? All these anybody can do, anybody can learn and do. This is something, again, you can learn, but it's your mindset on how you want to present yourself, how you are working with others. Those are the skills that is going to help you really grow, really far, right? So that's something that you have to look at. And I have, again, another diagram from PwC, trying to talk about some of the job profiles. You can think about being a product manager, marketing person, a lender partner, a client management, acquisition specialist, finance strategy and analytics, a customer experience person, or a trader job, deal making. If you know how to make deals, that's a good job. Or doing KYC and quality controls. for KYC. That is something that's a very sought after job and a well-paid job. You don't have to do much other than verifying documents and trying to automate how to verify those documents. Then you have finance controller jobs, credit risk manager jobs, and private equity jobs, right? So several aspects, several job profiles. And now I'll open up for questions before I give it to Prateek to take on how HeroWired is going to help you gain these skills and actually thrive in your careers.